Right, it's been a little while since I released a video, so to celebrate getting back to it, we'll go through the portfolio, do a portfolio review, which is just shy of 60,000, and I'll take a quick peek at the dividends I've received so far in May. Welcome back, guys. So it's been a little while since I released a video. If you're new to the channel, make sure you head down and subscribe to the channel so you get all my future content when, of course, it comes out. It's been over a week since I released a video, but work's been mad busy and I've been very busy, so not been able to get to it. But any future content coming out, make sure you subscribe to the channel so you get all that coming out. And then make sure you like the video while you're down there, because it really helps the channel, gets the message out to people, helps the channel grow, and that is the goal of it. Today I'm going to go straight into the portfolio. It's been up to £60,000. At one point, it's back down to 59,200 because the market's not behaved fantastically in the last couple of weeks, few weeks or so. And then I'll take a quick peek at the dividends I've received so far in May. Haven't been through my dividends in April, but I'll give you an overview of certainly the amount I received in April, and then we'll look at the ones I've received so far in May as well. It'll be a longer video because it's portfolio review and they always are, so I'm going to jump straight into the computer and we'll take it from there. Here we are then, straight into the portfolio. So we'll just go straight into the portfolio, go position by position, show you what I'm in, show you how large the position is, and I tell you what I'll do, I will sort them. So they're already sorted via market value. I didn't realize that, how very organized of me. But let's have a quick look at the top bit here. So total account value, 59,220. I'm 10,652 in profit at the moment. I've got £529 available to invest, not trade, to invest, get into the market and get it to work. My strategy more recently has been any small dips in the S&P 500 and in Apple. I've just been buying. Anything else besides that, I'm getting into quite high paying dividend companies, whether they're investment companies, REITs and things like that for the income. So let's go through the positions. I'm going to do it as fast as possible because I don't want this video to be crazy long. Largest position, S&P 500 Vanguard ETF. That is a very good chunk of my portfolio, and I'm adding to that on a regular basis. £1,628 in profit on that one. Vanguard Total Stock Market Index is the second largest with 5,874. It won't be long before Apple, which is my third largest holding, overtakes that, but we're currently £1,357 up in that. Apple, very large holding, and if we go into Apple, had a couple of dips more recently. So the last couple I have bought in. I bought in down here, I bought in again down here at around 123 I think it was. So we've had a reasonable day today, which is good, and that's why I'll always buy into Apple, because over time it's likely to really only do one thing. I can only see it doing one thing. Anyway, next position, Pimco Corporate and Income Opportunity Fund. I'll keep buying into that one and averaging up or down depending on what's happening with it. But it's an income fund with a very good yield, and it's just an income play. If it grows, fantastic. It's nearly 25% up at the moment, but that's not the point of this income fund. It's literally there just for income. Whether it grows and appreciates is not an issue to me. I'm not bothered. It's also a monthly payer. Speaking of monthly payers, AG&C Investment Corporation, I've got 3,950, no, let's just change, 3,960 odd pounds in that, or dollars, sorry. We are up in that as well, but that is also more of an income play. Very good dividend yield at the moment. Did reduce it not all that long ago, which I was a bit upset about, but I believe at the moment it's still paying, and a monthly payer again. AT&T, I said in a load of my videos that it's a $30 plus company in my eyes, and we did creep up over the $30 mark. In fact, we'd been up to up to sort of $32.50 there as an average across maybe a week or so. So I had quite a good week and then a dip since, but I still believe it's up there. So I could continue buying into AT&T. I've got a reasonable position, $3,387 in AT&T anyway. Apple Hospitality, that's a REIT. We've got $3,146 in Apple Hospitality REIT. I don't know if it's that one or another one that has stopped paying their dividends for a little while. I'll hold it for the moment, see what happens, see if they start paying at some point again. Tesla, $3,000. I'll take a quick peek at Tesla. I was very tempted to buy back in at Tesla down at these sort of levels. I think it was around at the end of this candle at the sort of high 500s. It's had a good day again today. It looks like the market as a whole has had a pretty good day, but I didn't buy in because I can't buy fractional shares on IG, and I would need to buy a fractional share really if I did at the time. Well, no, I would have liked to have bought a fractional share rather than a whole share. Bank of America, good dividend payer, got nearly $3,000 in there. Vodafone, £2,772, so actually the value is higher than Bank of America, higher than Tesla, higher than Apple, hospitality, possibly as high as AT&T. I don't know what the conversion rate is like at the moment. Fantastic dividend yield, great dividend payer, down nearly 20% on that as it stands. Not an issue, still getting return on my capital. That's the beauty of dividend investing, is you'll always get a return on your capital, provided they always pay their dividend. Pfizer, we're finally up in Pfizer. We were down for a very long time. They've obviously had a bit of a jump more recently. Everyone knows Pfizer, and I was expecting with the good news of the vaccine coming out to get a good jump in the share price, but they weren't taking profit from it, so actually it went down, but we're back up again now. So, but fantastic dividend payer, will always return on your capital. $2,632 in Pfizer. Enterprise Products Partners is a pipeline, Main Street pipeline company. Fantastic dividend payer, just received a very healthy dividend from them. We are down a little bit in them, but that's more of an income play, as is Iron Mountain, income play. We are up 45%. I made a fantastic purchase in them way back here, and we dipped a little bit, but it's gone up. So that was just recovery from you know what. What's next? All True Group. So fantastic dividend pays. The Dividend King's been paying its dividend for 51 probably years now, 52 maybe, don't know, can't remember. We're 20% up in All True Group. I would dollar cost average into All True Group consistently because they're massive. Because they're a Dividend King, it's a huge yield. They've got no reason to stop paying that dividend. So I'm quite happy to keep dollar cost averaging into those. Royalty Income Corp. Don't need to speak about Royalty Income, the monthly dividend payer. It's a REIT. You can just carry on buying that 24/7, and I do. Got $2,000 in that, nearly $2,000 also in Legal and General, pounds in Legal and General, which means again I've got more in Legal and General than I do Royalty Group, All True Group, Iron Mountain, Enterprise Products Partners, probably not much as Pfizer. So all Legal and General is a finance company, specialises in insurances and bits and pieces like that in the UK. Fantastic dividend payer. I'm up 4% in that, only 4, and I've held them for years, ages and ages. So not the best purchase, certainly not in terms of capital growth, but your dividend is there. Globalx Super Dividend Reit ETF is a monthly payer. Again, it's a REIT that specialises in, it's an ETF that specialises in REITs, and it's got a fantastic yield. Procter and Gamble, don't need to say anything about Procter and Gamble. If I do, then you're watching the wrong YouTube video. Ventus, another REIT, don't think they're paying a dividend at the moment. I will have to double check, but I'm not going to for you today. This is just a overview of my portfolio. That's what I hold. We are down in them nearly 5%. I think I'm just going to hold that if they're not paying their dividend until they start paying, or until I'm up in it. I've got no reason at the moment to pull out my $1,932 just to reinvest it. I'll just sit that one out for the moment. Vanguard Reit ETF, another ETF that specialises in REITs. The yield is not as big as Globalx Super Dividend Reit ETF, and it's also not a monthly payer. We are 55% up in that. I've got £1,887. HSBC is on the London Stock Exchange, and it pays a fantastic dividend, or has done for a very long time. I will be holding those forever and a day. We're massively down on those, 23%, but it's not a problem. I'm still getting return on my capital. Beauty of dividend investing. Ayers Capital Corporation, fantastic yield, very well-known company. Is not a king, I don't think, but definitely an aristocrat. Been paying the dividend for a very long time. We'll hold those, and would be happy to dollar cost average into those on a regular basis. Chimera Investment Corp, it's an investment company, massive yield. Got $1,191 in them. Federal Realty Investment Trust, so we've got another REIT. That one has been paying its dividend for a very long time, possibly a king, can't remember. I'm not going to look into it now because that's not the point of this video, but a very, very long time it's been paying its dividend for. So an income play, we are 51% up in them. That's another recovery from you know what last year. ExxonMobil, again, everyone knows ExxonMobil, oil, gas, energy, and they pay a very good dividend yield. I bought them at the right time. I'm 45% up in ExxonMobil, and they've done very well since. Only £1,000. We're getting down to below 1,000 now. So Simon Property Group, another REIT, good yield, very well-known company, very, very safe yield. Not the biggest yield ever, but a very safe one, just under £1,000. Boeing, 58% up in Boeing. I think that Boeing, if I just zoom right out here, we've still got a bit of a way to go in Boeing, and I'm just going to wait for that recovery. I'm going to aim for this recovery around here, up to around the $300 mark. So I'm just going to sit on Boeing. They stop paying their dividend, but I'm going to sit on Boeing and wait for them to either start paying their dividend again, or certainly get up to those kind of $300+ Store Capital Corporation, another REIT, $750. We're getting into the minuscule figures here. Facebook, $650. We'll hold on to just probably 2 shares of those. We're 115% up, so doing pretty well. Facebook is a zero debt company. You've got absolutely no qualms about being in Facebook. You could be in Facebook for the long haul. I wouldn't worry. That's a buy at any point. Not for me, because they don't pay dividends, so so not my kind of investment strategy, but a very good company nevertheless. I've been selling out of Facebook over the last year when it does very well in order to reinvest the capital back into dividend payers. But I'm holding on to at least 2 of their shares just for the long term. I'll probably never sell those. The Geo Group, 40% down, also not paying a dividend. I don't think at the moment. I think they froze it. So all in all, not amazing. I've only got $590 in it, 40% down. I'll be losing a bit of money if I sold that now. Happy, not amazing. Don't forget, not every investment is going to pay off. I'm just quite happy to sit on them at the moment. Vanguard International High Dividend Yield ETF, only 11.77% up at the moment, but a higher paying dividend yield. An International High Dividend Yield ETF, another ETF that you could just buy into on a regular basis. I've got Leggett and Platt, which is an industrials long-term dividend payer. Only got $545 in there, but they'll continuously, nearly 20% up, but they'll continuously pay a very reasonable dividend forever and a day, I imagine. Netflix, everyone knows Netflix, been doing okay recently. Has it been doing okay recently? Okay, well, I mean, it's doing okay since you know what, and then it's kind of traded sideways for a little while. Netflix is the future, so I've got one share in Netflix, currently valued at $502. I'll hold that forever. Let's see what happens with it, who knows. Hanley Capital Management, another investment company, very high dividend yield, $464 in that one. We're 25% up, which is lovely. EasyJet, not going anywhere at the moment, not anytime soon. It has made a reasonable recovery actually, looking at this from what I remember. Only £393 in there, which is probably the equivalent to what I got in Netflix, I would have thought. Walt Disney, 70% up in Walt Disney. Bought those at the right time, just as they were bringing out their live stream competition to Netflix kind of package, Disney Plus. So I'll just hold on to Disney. I've only got 2 shares in Disney, just hold those probably for the long term, probably forever. Carnival Corporation, again, just gonna hold those until we get a similar sort of recovery to where we were back pre you know what. So I've got no reason to sell. I had sold a little bit of Carnival at some point, but I'm just going to hold those. We've got 12 shares, it's only $336, so I'm just going to hold those forever and a day. I'm going to skip a couple of these and I'll tell you why in a minute. So I've got Viatris, which is the shares I got from Pfizer's merger with that other company that I can't remember the name of now. So they were just a complete freebie. I'm profiting £86 in them at the moment, $123, and they're worth $123, but it's a complete freebie, which is nice. STM Group is a finance company in the UK, terrible purchase, still paying a yield and pays me circa £2 every quarter. I've got £103 in there. Do I need to be taking that money out? No, I'll just take the dividend, albeit very small. I'll just take it, sit there, let it sit there and do its thing. Luckin Coffee, I'm not going to go through a story with that again, but not a great purchase. Now, these other ones, we've got Visca, Nikola, Li Auto, Candy, Hylian, Electromechanica, Lordstown, Xpeng, and Workhorse, all bought for a video, so you guys can pretty much live vicariously through me. Oh, and Neo, sorry, and Neo as well. All down. Basically, the EV space has been absolutely hammered more recently, absolutely beaten up. So those are all completely down. I only put £100, roughly £100 into each one. So I've got no reason to sell them. In fact, this could also double up as an EV stock update. Effectively, they're all down. So lucky you didn't buy them when I bought them. If you did, then you're in the same boat as me. Although I only did it as an experiment because I didn't look into all the companies and decide whether I wanted to invest in them. I just bought them, which kind of shows you. So the portfolio as a whole is 22.2% up, which considering I invested a lot of the money, or certainly a reasonable amount of money pre everything that went on last year, and then we had a 30% dip, I think 22% is not too bad. And that is a roundup of the portfolio as a whole. So I'm going to quickly go through the dividends I've received so far in May. So to begin with, Pinco Corporate and Income Opportunity Fund, that is the monthly payer, $16.16 for that. AT&T paid me a healthy $35.79, which I get every quarter from AT&T. AG&C monthly payer, get about $15.28 from AG&C. Enterprise Products Partners, as I said before, relatively healthy dividend for that one, £19.18 every quarter, thank you. Globalx Super Dividend Reit Etf, so again a monthly payer, £6 from that. I'll keep adding into that and just bumping that up, and that'll continuously grow. Apple paid me £5.70, that was £3.70 I think before, or around that, or £4. So I've been adding to Apple a reasonable amount, so quite a nice amount from Apple actually. Royalty Income monthly payer, as always, £3.96, and it's around that every time. I'll just continuously drip feed into Royalty Income when I've got some spare cash, if I've got nothing better to spend it on. And then Procter and Gamble, good old Procter and Gamble, which I didn't need to talk about in the portfolio review, £7.30. And that so far has brought me in £101.83 as of May. And April, I said I would show you that, was my second best month ever. As you can see, plotted on my little graph here, which is the simplest thing in history, because I am the simplest thing in history, and it's £189 in April, all reinvested plus some more. So that should hopefully all go in the right direction and continue to grow. But you can see where I started investing heavily was kind of back here, and then of course everything went wrong, but the dividends and everything have continued to go up, which is good. So that's a complete overview. That's a complete overview of the portfolio as well. Just scroll up and down there, you can kind of see yourself what I'm in, and hopefully for the first video back in a long time, that wasn't too boring, give you a bit of transparency on what I'm about. If you're new as well, subscribe to the channel if you're new as well, obviously, and I will see you guys out. So there we are, guys, full portfolio review, or certainly a look at the portfolio. It was relatively brief, and a look at the dividends that I've received in May so far and in April. Hopefully that wasn't too boring for you. I like to do a complete transparent look at the portfolio every now and then, so you can see exactly what I'm getting into and out of and what positions I hold, certainly. And hopefully you enjoyed the video. Like it if you have enjoyed the video and you've got this far with it, you're not bored yet, you must like it. And subscribe to the channel if you haven't already for all future content coming out. I'll do another portfolio review maybe in a few months' time, when it grows a little bit, or if there's fluctuations with it, maybe a video every couple of months about the dividends I'm receiving as well. So I hope you enjoyed the video, and I'll catch you guys in the next one. See you later.